If you're switching to Xero from a spreadsheet or another accounting system, you may need to bring your existing balances into the new Xero file. In Xero, these are called conversion balances, although you may also hear them referred to as opening balances. These balances create continuity between your previous records and your new Xero file. In other words, they give Xero the correct starting point. This step is only relevant if your business was already operating before signing up to Xero. If you are setting up a completely new business and there are no previous transactions or balances to bring across, you can skip this video. This is not relevant for you. But if you had, please keep watching so you set up the opening balances correctly. Before entering anything, you first need to decide from which point in time you will start recording transactions in Xero. Where possible, I generally recommend moving to Xero at the beginning of a financial year. In that situation, you would normally complete the previous financial year in your old system and bring the closing balance sheet figures into Xero as your opening balances. Changing systems partway through a financial year can be more complicated. Technically, you can begin using Xero at any point in time. For example, you can start it in February if you like. However, this may split the financial year between two systems, which can make year-end reporting and tax preparation a little bit more difficult. Depending on the circumstances, you may instead decide to bring the full financial year's transactions into Xero so the entire year is held in one system. But I have to tell you, the best approach depends on the business and the quality of the existing records, so consider getting advice before completing a mid-year conversion. Our demo company, Ben's Painting, begins using Xero from 1st of July 2026. We therefore need to bring in the closing balances from 30th of June 2026. To enter these balances, go to Accounting, then Accounting Settings, and then select Conversion Balances. This is a one-off setup. Once the balances have been entered correctly, you rarely need to return to this. Before entering any figures, check the conversion date. The conversion date tells Xero where the previous accounting records end and the new Xero records begin. For Ben's Painting, the conversion date is the 30th of June 2026, which is the day before we actually begin recording business transactions in Xero. This means that Xero expects us to enter the account balances as at 30th of June 2026. If you were starting in Xero from, let's say, February, the conversion date would be 31st of January, that is the last day of the previous month. Xero would then expect the balances as at that date. I quickly changed this back to July and 30th of June as that is our conversion date for Ben's Painting. You can also confirm the conversion date at the top of the screen, as Xero is asking us to enter the account balances as at 30th of June 2026, so that is our conversion date. And that is what we'll do now. You can add accounts individually by selecting them from the drop-down menu, or you can choose Show All Accounts to display all accounts from your chart of accounts. Because this is a year-end conversion, I'm not bringing across the previous year's income and expense balances. That financial year has already been completed in the old system. Instead, I will focus on the balance sheet accounts. You, of course, need a closing balance sheet from your previous system to enter these figures accurately. You also need to be mindful of debits and credits, and I'm aware that this topic might be a little bit too much for new Xero users, so as a general rule, I would only say that asset balances are entered in the debit column, while liability and equity balances are usually entered in the credit column. The total debits should equal the total credits. And if they don't balance, Xero will post the difference to the historical adjustment account automatically. A balance in historical adjustment usually means that you need to investigate whether an amount is missing, incorrect, or just entered on the wrong side of the table. Whenever possible, investigate any difference and work through it until no adjustment is showing down at the bottom. Once you have entered the balances, click Save, and your opening balances are saved for the conversion date. You can then select Remove Zero Balances to make this list easier to review. After saving, you may run a balance sheet report as at the conversion rate. This report should reflect the opening figures you have just entered. Compare it with the closing balance sheet from your previous system and make sure the balances agree. If you later discover that something was missed or entered incorrectly, you can return to conversion balances and update it. But once the balances are complete and accurate, you normally won't need to use this section again. Its purpose is simply to ensure continuity between your old accounting records and your new Xero file. If you have any questions at all, please leave them in the comment section below. And if you found this video helpful, please consider subscribing to my channel for more Xero tutorials. See you in the next one.